Thank you for reviewing today's Annual General Meeting presentation. I'm Duncan Gibbs, Managing Director and CEO for Gold Road. I'll let you review our formal disclaimer on our website. Building on Gold Road's history of consolidating the Yamana Belt and the discovery of Gruyere in 2013, 2019 was our year of transformation in bringing Gruyere into production with our joint venture partner, Goldfields. Gruyere is a Tier 1 quality asset averaging 300,000 ounces of production over the 12-year operating life. Gruyere provides a base for Gold Road to build a significant Australian gold producer. As I will communicate later in my presentation, we aspire to grow the company towards attributable production of 300,000 ounces through the optimisation of the Gruyere operation and utilising our expertise in the discovery and development of new gold operations. Turning to our corporate profile, Gold Road has a well-credentialed board with skills spanning mine development, mine operations, exploration and finance. Our share register continues to have strong, high-quality institutional holdings, especially from North America, but pleasingly, we've seen an increase in Australian institutional ownership in the last year. We joined the ASX 200 and the GEXJ, and more recently the GDX, an ETF comprised of the world's 50th largest gold producers. Our balance sheet is exceptionally strong for a company that has just built a new operation. We have a modest hedge book established to support the debt financing risks for the construction of Gruyere. However, we still maintain strong exposure to the gold price, which has rallied strongly through the last 12 months. Last AGM I showed you a movie of Gruyere with the commissioning of the SAG mill in progress. We delivered on first gold production at the end of the second quarter. The plant has been built to a quality standard with the commissioning and ramp up tracking well against our expectations. We successfully attained commercial production in September 2019 and delivered against our guidance. Our cash position at the end of the year was slightly better than we anticipated, with the final capital cost below budget, strong productions and the healthy gold price. As flagged in our 2020 guidance, our first quarter of production was a little softer, driven by higher maintenance requirements as we addressed reliability and wear issues in the crushing and milling circuits. The first SAG mill reline was successfully completed in January. However, it unfortunately coincided with a rain event which for safety reasons delayed some of the maintenance works and extended the duration of the shutdown. We completed a further maintenance campaign at the end of March and we're pleased with the plant performance we're now seeing. Given the operational uncertainty arising from COVID-19 in late March and the rising gold price, we took a decision to pre-deliver 5,800 ounces of production into our second quarter positions. This was done to reduce our forward sales gold exposure and the potential need to cash settle those contracts. At the start of 2019, COVID was an issue we hadn't anticipated when we communicated our guidance of 250,000 to 285,000 ounces within a range of $1,100 to $1,200 per ounce all-in sustaining cost, which places Gold Road as one of the lowest cost Australian producers. To date, Gruyere has not been impacted by COVID-19 and we have retained our guidance. The health situation in Western Australia makes it one of the best places in the world to be operating a gold mine. However, coronavirus still represents some risks, potentially through international supply chains, and we have to consider the possibility of further outbreaks in WA or perhaps a second wave in how we manage our balance sheet and hedge book. In February this year, the joint venture announced a significant increase in indicated resources, with 1.2 million ounces converted from inferred resources below the base of the current pit design. As I will expand upon later, we aim to convert much of this increase into reserves. 1.2 million ounces is a meaningful addition, equivalent to 4 years of production at an average annual rate of 300,000 ounces per year. On the Golden Highway trend, since the formation of the Gruyere joint venture, we have put all of the resources there into reserves. Outside of the joint venture, and approximately 55 kilometres south of the mine, we reported our inaugural resource at GILMOUR. Turning to GILMOUR, our 100% owned resource totals 258,000 ounces at a grade of 3.1 grams per tonne. These resources are reported in a gold price shell at $1,850 an ounce, with resources below that shell viewed as potentially mineable by underground methods and constrained with $1,850 stope optimisations. While we have more work to do before we can report reserves, we anticipate there will be a high conversion of resource to reserve. Our balance sheet is strong. We grew our net cash position at the end of the March quarter to $35 million. We closed out our $50 million working capital facility, which was an important milestone marking the end of the construction-related financing for GRUYERE. This removed constraints on the use of our cash proceeds. Given the COVID-19 uncertainties at the end of the March quarter, we retained a high level of liquidity at $115 million and reduced our hedge book obligations. When I spoke to you at our last AGM, Gold Road shares were trading at 98 cents. Our shares have responded well to the positive company news flow through the year. Like all equities, we took a big COVID-19 dip, and you can see we've had a V-shaped recovery currently trade close towards our all-time high. While we've benefited from the strengthening gold price, Gold Road has outperformed our market peer group, and the liquidity of Gold Road shares has grown considerably through the year. Turning now to Gold Road's strategy and our future. Firstly, our strategy is centred on creating shareholder value by growing the business, something that the company has a strong track record of doing. Our platform for growth is based on three elements. Firstly, GRUYERE is a world-class asset where we've been seeking to grow production and mine life. As discussed earlier in my presentation, GRUYERE has a well-constructed plant. The operations team have successfully delivered on commissioning and ramp-up. Their next critical task is to ascertain what the plant is capable of and to unlock that potential. Through increasing plant recovery and throughput and optimisation of reagent usage, we can work to reducing the unit operating costs. In mining, we need to validate and potentially improve upon pit slopes and costs. We've only just started mining and processing fresh rock, and we need that operational experience to benchmark our performance over the next 6 to 12 months. However, it is our view through operational excellence that we can extend the pit further at depth at a similar all-in sustaining cost structure rather than optimising pits at a higher gold price with reduced margins. This was the aim of our 2019 drill program, which delivered the 1.2 million ounce increase in indicated resources. Our second platform for growth is discovery. Gold Road holds a unique global opportunity of an entire greenstone belt in a low-risk mining jurisdiction. Systematic exploration of the belt has only just begun in the last 3 years when Gold Road has had the financial strength to commence the work. Our goal is to make a meaningful discovery which, combined with the enhancement opportunities at GRUYERE, could lift our production above 300,000 ounces a year. During 2019, we completed a systematic compilation of historical exploration data and augmented that data with a regional gravity survey. We have now compiled our own proprietary map which demonstrates all the major geological elements of Yamana correlate with other fertile Yilgarn terrains. Our targeting reviews based on this information has led us to focus in the southern part of the tenements, where the majority of the 2020 exploration budget will be committed. Our new large-scale targets will be tested through this year. In 2019, we were successful in discovering GILMOUR, where we have continued to do drilling targeting mineralisation in the hanging wall to the main lode. While we don't see GILMOUR as the scale that will by itself support a new operation, we do see an opportunity to further build the resource and the economics of the resource towards that endeavour. Outside of Yamana, we have a joint venture with Cygnus in the Wheatbelt. This area also lacks a history of modern exploration. We have recently obtained encouraging early stage aircore results drilling at the Hammerhead prospect, and further exploration is planned to recommence in the near future. Our third platform for growth is to consider external opportunities. Our corporate development team has a structured approach. Of key importance is the creation of shareholder value rather than just growth. Our focus is on high margin operations in low risk jurisdictions. We will consider exploration and development assets for which we have a track record in bringing to account, as well as established operations. To deliver on our strategy, we need the right foundations. Key is our organisational capability, the right talent, sound business practices and processes, and a capital management strategy to support investments. In ESG, we aspire to be a market leader in the Australian gold sector. As a company, we have been doing a lot across the ESG spectrum. The construction and safety performance at GRUYERE was world class. The operation has been developed to high environmental standards. We have strong relationships with our community and one of the highest levels in Indigenous employment in the goldfields. Once we have a year of operations, we will be able to report more fully, including on our operating environmental performance, with this being a key area of attention. Over the last year, we have delivered on shareholder value with shareholder returns of 75%, which further extend the returns since the GRUYERE discovery. The company is in a strong financial position with a long life, low cost operation at GRUYERE and excellent prospects for further delivery. I thank you for reviewing today's presentation.